So I'm Claire Smith, and I'm a vegan entrepreneur and impact investor. I've been in the financial markets for my career since the mid-1980s. And a few years ago, I switched into running a vegan investment portfolio of my own, which was investing in vegan businesses, which other people subsequently joined. And I created the US Vegan Climate ETF, VEGN, which is traded on the New York Stock Exchange. And I've also launched the Beyond Animal platform, which combines a humanity platform where people can gather together that are interested in being part of this transition towards a plant-based world and a world free of animal cruelty. And part of that effort is providing funding to those companies in this space. And we hope to facilitate that funding, make it a lot quicker and easier for companies to get funding, and also for people, investors who are not necessarily active at the moment, to participate in that funding.
So what is the vegan investment opportunity, and how big is the market?
The vegan investment opportunity is at least as big as the investment opportunity or the investments or the activity that's going on in animal exploitation at this point in time. And it's about this transition and migrating the 2.5 trillion of products which are made from animals. We've got 1.4 trillion, which is just in meat, and you've got dairy, then you've got fish, you've got leather, you've got wool, you've got all of the other activities that are using animals, like animal testing to think about. So parts of the pharma industry, the clothing industry, as I mentioned, there's a huge industry in shoes, for example. So all of these, if we move away from the use of animals, they need to be creating new products. So the ingredients need to be created. There are new ways maybe of using those ingredients, using these new materials to create new products which are more sustainable. Why? Because animal agriculture is inherently unsustainable. It uses a massive amount of resources for very little return on those resources, and it's incredibly polluting as well, both in terms of the climate and water. So with that huge transition to take place, a lot of funding is going to be needed. Part of it will come from investors, some of it may come from governments. We wait and see it on that score. But there is definitely a big opportunity there in terms of investment in order to get from A to B.
So you've recently launched this new fintech product, which includes an investment platform. What is, and presumably as part of that, getting from A to B. So what is the gap that you see in the market that you're trying to fill there?
Well, a lot of the startups do struggle in the very initial stages to get angel investment or seed investment from those VCs that will look at the early stage companies, because maybe they haven't really got any traction, or they've only been selling in very small scale, maybe on markets or etc. And it's very difficult to get visibility to that future revenues. And so that's one point where people can just get stuck at that level and never get beyond it. Even if they get beyond it, they then get into a kind of merry-go-round of raises, where as their product is getting more traction, they're getting more sales, they need to raise more money. Why? Because every time that they produce product, they have to fund that product. They have to go buy the ingredients, manufacturing. They have to have salespeople going out to make the sales, get the distribution partnerships in place. This is very costly, but a lot of that is working capital, purely making the product. You have the cost of goods, you sell the products for a margin, and then you can return that money back into the business. So that short-term receivables financing for these early stage companies is extraordinarily hard to get, because the banks won't look at you until you've got 2 years of financial statements. So that is one area where we see the platform being very important in helping founders, once they have some initial funding to get going, keep going and allow that growth to happen without them constantly going back to VCs and giving up equity in order to fund this production.
Does it help people who might otherwise not be able to invest in these types of businesses access those types of businesses?
Yes, absolutely it does, because the VC funds have very high minimums and the typical investor cannot get involved. It's really only institutions or ultra high net worth that tend to invest in VC. The average investor is limited to possibly joining an angel club, although that would involve some kind of payment to get involved, or just watching out for the occasional crowd raise. But those are very limited as compared to the many hundreds of companies that contact me on an annual basis. Only a few of them will end up going through a crowd raising platform. So your access is very limited as an individual investor.
COVID-19 has very much drawn attention to the problems in our food supply chain, particularly those in the meat industry.
Mm-hmm.
How does this make the case? Obviously, this makes the case for a transition to a more meat-free food system. But what does that mean in sort of a practical way? Like how do you see that? How do you see what we're seeing happen now accelerate that transition? And how does the sort of the meat-free, lower meat food system deal with some of the problems that we're starting to see?
Okay, so I think people obviously, the people are fairly clear. I mean, leaving aside the conspiracy theories, of course, but fairly clear on the fact that zoonotic diseases come from animals as opposed to being created in a lab, and that is already kind of elevating people's consciousness as to, so maybe we shouldn't be using these animals in this way, or there's something wrong with the way this is happening in that these diseases being transferred from them to us and assuming forms which are very dangerous to us. So people are starting to make the connection from that. There's a further connection that's being made, I think slowly but surely, in realizing that a lot of diseases that come or you're at greater risk to, let's say, I can't say they come, but certainly the effect that it has on your body is that you can be more vulnerable to COVID-19 if you have heart disease, if you have diabetes, obesity, high blood pressure, etc., cancer clearly as well. And a lot of those diseases are increased by eating meat as well, to such an extent that if you start to think about the cumulative probability of eating meat, getting those diseases, and then those diseases leading to you having a far higher likelihood of dying from COVID-19, there's suddenly a big connection there of, how many times more likely am I to be harmed by COVID-19, to not be able to recover, but to actually die from it, if I have this unhealthy body through having eaten a lot of meat. So there's some calculations there, which when I find time, I will do, and I will actually get to a number. But this, I think, is fueling consumers' interest. And then when you think about the slaughterhouses, etc., that's also increasing their distaste when they know that not only are the animals being hurt in slaughterhouses, but also there's this issue of workers' rights in slaughterhouses. In the middle of all of that, with these disruptions in the meat industry, you have the plant-based industry generally going on as normal. Why? Because they can use their ingredients in an easy form, they can grow it, they can store their ingredients, they don't have these supply chain vulnerabilities, and the production of the products generally goes through without very much human interaction. It's generally going through in a far more automated way, and the people are not sort of, putting their hands into the machinery or into the sort of mixtures of plant-based meats or anything. It's all happening through, mechanical stirring and then going through pipes, extrusion, or through with the plant milks going through the mixing and emulsifying and then going into the bottles without there being any human interaction. So that supply chain is so much more resilient and so much safer, so much less likely to cause problems to the product, to the people consuming the product, or the people in the factories. And I think that's where we're seeing the benefits of this switch.
You have mentioned that you think we will that plant-based proteins will eclipse meat within the next decade. Why are you so confident of that time frame? And does does COVID-19 accelerate that shift?
I believe that COVID-19 does accelerate that shift. And I'm very confident about the timing, because the industry of animal agriculture is dependent on subsidies. It's not inherently very profitable in its own right, whereas the plant-based industries are becoming profitable in their own right without needing the subsidies. We see Beyond Meat, who has a positive EBITDA now. It became profitable this last year. And so that will mean that they have money in order to invest in their industries, in order to grow, in order to achieve more economies of scale. The bigger economies of scale they get, the more they can reduce the price, the more they can invest in R&D, the better the products become. And so there is going to be this crossover point where the plant-based meats are as acceptable from a taste, texture, etc. perspective. They have clear health advantages, they have clear environmental advantages, and they are available as cheaply for as cheap a price as meat. And bear in mind, the supply stoppages are causing meat prices to go up as well. So this is accelerating, the COVID is accelerating an increase in the price of meat because of the shortages. And so we have this crossover in terms of people going into the supermarket and being able to buy one versus the other. And then you have a crossover at the industry level and at the company level in terms of profitability. Meat producers were not so profitable already. They were relying on government support. Meanwhile, you have the plant-based businesses becoming more and more profitable at the same time, where the meat producers are starting to see less economies of scale. They're starting to be forced into smaller. We've seen the meat producers have huge economies of scale because of this massive consolidation. But as their throughput goes down, they then lose those economies of scale. And I think that in terms of investment risk, I don't think you have to look too far to find some pretty major investment risks in the meat production industry.
And, clearly the meat production industry has been one of the ones from a financial perspective to be suffering during this current crisis. How has your ETF been performing through this?
Certainly it's benefited from not being in the producers of meat, but not being also in quite a number of other sectors of the food industry, such as restaurants, fast food chains, etc., that have been shuttered during this period. Some combinations of our exclusions, such as the ones around carbon emissions and also meat content, caused us to extract the airline industry, the hotel industry, the cruise line industry before the COVID crisis broke. And so we benefited also from not having those in the index as well, and the ETF is tracking the index, as you know. Pre-existing, we've always called it Vegan Climate Index because we're conscious of the greenhouse gases, and that always caused us to be out of the fossil fuel area. And so part of our performance in this last while has also been coming from being completely devoid of any oil stocks, and also devoid of large banks who have disproportionately high lending to oil stocks. Those were already removed from the index as well, and they have been poor performers. So counterbalancing the high beta of the technology stocks, which supported the performance on the upswing, these exclusions and the absence of some of these very poorly performing companies on the downswing have actually moderated the beta on the downswing. So net through the up and the down and the recovery, there's been outperformance.
So is there a sense to which sort of you have been lucky, or is there also a way in which your process is picking companies that are by definition more sustainable, and so it wouldn't necessarily have mattered what the crisis was, sort of what the black swan event was, you would anticipate that your portfolio would be more resilient?
I can't say that I necessarily, sat down a few years ago and decided, I'm going to create a pandemic-proof portfolio. I wish I could say that I had. But what I was able to do when we created the index, and we were discussing how we were going to create the index, for some year or so before, was this confluence of vegan principles and the climate, and this overall, what is sustainable, what is kind of morally acceptable, what is ethical, what is sustainable, and trying to build that into the portfolio. And so I think a lot of people have talked about peak oil for some time, but it was always hard to sort of like pick a date, let's say. And I won't say the oil is kind of over. Clearly, there is still going to be production of oil for some period of time, but the situation has dramatically changed. And so, to the extent that people were able to see a wall at some point in the future for a number of these companies, and the issues around animal agriculture, the efficiency that I've discussed, the changing consumer behavior, and also the climate effect of the animal agriculture, because once people have reduced their fossil fuel exposure and got that out of the portfolio, the next thing they do is run the numbers and see where the next highest exposure is, and they see it's animal agriculture. And so that's where they start to think to remove assets. And this was always going to be the next place that governments were going to look in terms of who are the big carbon industries. And so, to the extent that there were wars approaching us, and they were maybe a little bit distant, they've just basically come, they're here now. It's accelerated a process, but it was a process that was bound to happen.